All right, guys, welcome back to the channel. And today I want to talk about this table because I noticed that a lot of people don't know this information that is portrayed in this table, and it is very important in terms of your risk management. So let's get started with today's video. All right, so this table is based on pure mathematics and statistics. And what it tells you is the odds of losing X amount of trades in a row within 100 trades. And it's divided over your win rate. Now, most people I know have a win rate anywhere in this area. And if we look at the odds of losing 6 times in a row, it's 99%, 93%, and 78%, which means that every 100 trades, there's a very high probability you're going to lose 6 trades in a row. And this is something you should be prepared for. And this is something no educator tells you, at least most educators won't tell you. And if you're risking a lot, you can have massive drawdowns. And this doesn't tell you, for example, let's say you lose six trades in a row, then you win one, and then you lose 6 trades again in a row. And that's possible with a 50% win rate. It's easily possible. And I've seen it happen over and over again. And the point is, you need to be prepared for it. My win rate is 65%. Which means that I still have a 16% chance of losing 6 trades in a row. Now, I have never lost 6 trades in a row, but I have lost 5 trades in a row easily. There's a 40% chance of this happening within 100 trades. You need to be prepared for this when trading, because if you have a strategy, your equity curve is going to look like this. Hopefully something like this. And this is maybe a bit of an exaggeration, but this is essentially what it's going to look like. And these periods are these losing streaks, and they happen even with a high win rate. This is easily possible. And what defines you as a trader is sticking to your plan during these periods, because if you make mistakes, let's say you lose 5 times in a row and you have a big drawdown, and then the 6th trade comes along and you're like, I'm not going to take it. It's going to be a loser again. I'm going to wait. And then all of a sudden it's a winner and you missed it. And it all just adds up to bigger drawdowns and taking it longer for you to get out of the drawdown. So you need to stick to your plan in this period of drawdowns. That's so important. And that's what really makes you as a trader, because when everything is going well, it's easy to follow your plan. But when things are not going well, that's the hard time. That's why you need to stick to your plan. And if not, you're not going to make money in the long run. That's the challenge. And the only way, in my opinion, to get through these periods without making mistakes or minimizing mistakes is with 2 things. Number 1, complete confidence in your edge. And I've spoken about this many times before, but you need to have full confidence in your edge. And you do that by backtesting, gathering statistics, knowing how it has worked in the past, why it works. So what are the underlying concepts of your edge? When are the bad periods? How bad were these periods in the past? And then also knowing what is normal in terms of statistics and distribution of outcomes. Because if you read Mark Douglas' book, he basically says that if you have an edge, there's still an uneven distribution of outcomes. So yes, you have a 65% win rate, but it doesn't mean that you win 6 or 7 trades out of every 10. It means that you win 650 trades out of every 1,000 trades on average. So you have to look at it as just another trade, but you need to be taking all the trades where your edge is evident. And you also need to know that it's completely normal to lose this. So what I would suggest is that you take a print screen of this, print it out, put it next to your computer, and every time you have a hard period, look at this and just look at, all right, my win rate is 50% right now. I've lost 5 trades in a row. You look at it and there's a 95% chance of this happening within 100 trades. And then you think to yourself, all right, this is just completely normal based on statistics. I have nothing to worry about. The only thing I need to do is stick to my edge, stick to my plan, not make any mistakes, and it will turn around. If you have a clear edge, it will turn around. Yes, you have these periods, but if you stick to the plan during these bad periods and you know it's normal, then this is going to happen. And it's at that point that you make this new equity high where you increase your confidence in your trading and you're like, all right, I had a shit period. Everything went wrong. I lost, but I stuck to it. I stuck to my plan. I executed my edge without mistakes, and now I'm making a new equity high. And that really gives you the confidence. So next time you have a shit period, you know, I've been here before. My statistics in backtesting show me it's happened before. The statistics I've printed out next to my computer shows me it's completely normal. So the only thing I need to do is relax, stick to the plan, and execute my edge. So bit of a shorter video there, guys, but I wanted to explain this table to you and how you can use it as well, and why it's so important to have this next to you and to understand that losing periods are completely normal in trading, and that you can have drawdowns for months, sometimes half a year in drawdown. It happens, and it's, yes, sometimes it may be the worst case scenario, but you need to think about it before you freak out. You need to have a plan before it happens, because otherwise the odds of you making mistakes are pretty high. So thanks for watching. The coming week I am on holiday, so normally I upload on Wednesdays and Fridays. Now it will be a bit different, but I'm still going to upload 1 video per week, so you guys can still learn something from me. Again, if you have any questions or suggestions for future videos, let me know and I will take it into account and answer your questions. Thanks for watching, and see you in the next video.